All right, today we're going to talk about two names you've definitely heard of, but maybe don't know the whole story behind. Fannie Mae and Freddie Mac. These are the hidden giants propping up the entire American housing market. And their story? Well, it's a wild ride of unbelievable success and, frankly, a collapse of epic proportions. To really get why they're so powerful, we have to start with something most of us just see as totally normal. I'm talking about the 30-year fixed-rate mortgage. It's the absolute bedrock of buying a home in the U.S. But here's the thing. When you look at the rest of the world's financial systems, it's actually kind of weird. Locking in an interest rate for 3 entire decades is almost unthinkable in most places. So how on earth do we pull it off?
Well, it all comes down to a fundamental problem. For you, the person buying a house, it's a fantastic deal, right? Your payment is the same for 30 years. If interest rates go through the roof, you're protected. If they fall off a cliff, you just refinance to a lower rate. It's a win-win. But now, think about it from the bank's perspective. For them, it is a huge gamble. They're stuck giving you money at, say, 4% for decades, even if their own cost to get that money suddenly jumps to 8%. It's a surefire way for them to lose a ton of cash.
So that leads to the big question. If it's such a lousy deal for lenders, how does this mortgage even exist? And the answer is two companies that were created specifically to solve this exact problem, Fannie Mae and Freddie Mac. They were the engine room that kept the whole U.S. housing market humming along.
See, they weren't normal companies. They were something called a government-sponsored enterprise, or GSE for short. And this is a really unique idea. Think of it like a hybrid creature. They were for-profit companies traded on the stock market with shareholders to please, just like any other big corporation. But they were also created by an act of Congress. They had a public mission and, crucially, a bunch of special government perks. This put them in a very, very powerful position.
So here's how they solved that big mortgage problem. They basically had two main jobs. The first was their guarantee business. A local bank would give you a loan and then immediately sell that loan to Fannie or Freddie. Fannie and Freddie would then bundle thousands of these mortgages together, create something called a mortgage-backed security, and then, and this is the magic part, they'd slap a guarantee on it, promising to cover any losses if homeowners couldn't pay. Then they'd sell that security to huge investors. This got the risk off the local bank's books so they could go out and make more loans. Their second job, they were also just massive investors themselves, buying up mortgages and these securities for their own giant portfolios, and they paid for it all by issuing trillions of dollars of their own debt. And you know what? For a long, long time, this system worked spectacularly well. From the early 90s all the way into the 2000s, Fannie and Freddie were on an absolute rocket ride. They grew from just being important players in the market to becoming the undisputed titans of global finance. And just look at these numbers. You can see their incredible takeover of the housing market right here. Back in 1990, they were involved in about 41% of all new mortgages. Fast forward to their peak in 2003, and that number had soared to 57%. They were basically the gatekeepers for almost every conventional home loan in America.
Now, to fuel all this growth, they had to borrow a lot of money. And I mean a staggering amount. By 2003, their combined debt hit $1.7 trillion. To give you some perspective, that was equal to a quarter of the entire U.S. national debt at the time. They weren't just big anymore. They were completely woven into the fabric of the entire global financial system.
And their rise to the top was incredibly fast. In 1990, a new law really put the booster jets on them as for-profit companies. Then in 98, a global crisis hit, and they were basically the only ones left funding mortgages in the U.S. This proved how vital they were, and it gave them huge political power. And by 2003, yep, they were sitting on top of the world. But you know how these stories go. Just when they are at the absolute peak of their power, the ground started to shift beneath their feet. A new, much more aggressive type of competition showed up from Wall Street, and it would force Fannie and Freddie to make a choice that would lead directly to their own destruction.
So this new competition came from Wall Street-backed lenders, and they were flooding the market with some really risky stuff, subprime and alt-A mortgages. These were basically loans for people who couldn't qualify for one of the safe traditional loans that Fannie and Freddie backed, and the market for these things just exploded. It more than doubled in just 2 years, hitting over $1 trillion. All of a sudden, this was a massive piece of the market that Fannie and Freddie were being shut out of.
So this put them in a really tough spot. Remember, they're for-profit companies, their shareholders are screaming for growth. They had a choice. Either they could stick to their safe, boring, high-quality loans and just watch their business shrink, or they could jump into that murky, risky subprime pool to compete. They jumped.
And that decision
to start chasing super risky loans just as the housing bubble was inflating to its absolute peak, well, it set the stage for one of the most spectacular corporate implosions in history. The numbers here are they're hard to even wrap your head around. In 2003, at their peak, Fannie and Freddie made a combined profit of almost $13 billion. Just 5 years later, in 2008, they posted a combined loss of over $108 billion. That's not just a bad year, that is a catastrophic, company-ending black hole of losses.
Now, of course, they weren't the only ones in trouble. When that housing bubble finally popped in 2007, that entire subprime industry just vanished. It vaporized, almost overnight. The problem was, Fannie and Freddie were now so deeply invested in this toxic stuff that when it all went bad, they were so big they threatened to take the entire global economy down with them.
And so, on September 7, 2008, the thing that was once unthinkable happened. To stop a complete and total financial meltdown, the U.S. government stepped in and seized control of both companies. It was the largest financial bailout in American history. The giants had finally fallen.
So in the aftermath, with everything in ruins, the big question was, what on earth went wrong? And how do we build a system that can never, ever let this happen again? Because the crisis made it painfully clear that there were some deep, fundamental flaws in how Fannie and Freddie were built.
The whole model, it turns out, had these huge weaknesses. The number one problem was something called moral hazard. It's a fancy term for a really simple and really dangerous idea. Heads, we win. Tails, the taxpayer loses. The executives and shareholders got incredibly rich during the good times, but when all their risky bets went bad, you and I were left with the bill. Then there was the fact they were just too big to fail, which created massive systemic risk. All the risk from the entire U.S. housing market was piled up inside just two companies, and they didn't have nearly enough cash on hand to survive a real storm.
So looking ahead, how do we fix this? Well, the experts have laid out a few key ideas. First, make that government guarantee totally explicit, not some vague implied thing, and charge for it. Second, you still want to keep the good parts of a market-driven system, like innovation and efficiency. Third, and this is a big one, you have to require way more private capital to be on the hook for losses, so taxpayers aren't the only ones left holding the bag. And finally, you have to have much, much tougher rules about how much money they need to set aside for a rainy day.
And that really leaves us with the enormous question that policymakers are still wrestling with right now. How do you build a system that gives us what we want? Affordable homeownership, a stable housing market, that beloved 30-year fixed mortgage, but do it without creating these supergiants, so big and so powerful that their failure could bring the rest of us down with them. It really is the multi-trillion-dollar puzzle at the very heart of the American dream.